Belle with the Simple Money Project here with your 1 minute market update. So today, the S&P 500, which is the index that tracks the 500 largest American companies, dropped 2.24%, partly due to news from the Fed that they would not be cutting the federal funds rate. The federal funds rate is the interest rate that banks charge other banks for lending each other their excess cash. Because, by law, banks have to keep a certain percentage of their deposits in an account at the Federal Reserve. If one bank doesn't have enough, they have to borrow it from another bank, and they charge interest at the federal funds rate. So why do we care about the federal funds rate? The rate actually affects more than just banks. It changes the interest rates on everything, from home and car loans to credit cards to business loans. If the Fed cuts the rate, it essentially gets cheaper to borrow money across the board. And cutting the federal funds rate has historically boosted the stock market because it essentially makes borrowing cheaper for everyone, and it's been shown to lower inflation. But the Fed announced today that they would not be cutting the rate because they are uncertain about what effect the tariffs and trade war will have on the economy. Basically, they're taking a wait-and-see approach, and the market dipped in response. If you've been watching my past shorts, you may have noticed a common theme: uncertainty. It's everywhere right now. And if you'd like to be a little bit more informed, subscribe to the Simple Money Project, where I put out daily market updates in as close to 1 minute as I can possibly get.